Welcome along to the very first episode of the SEEDL Small Business Visual Podcast. I'm Anthony.
I'm Jo.
Oh, see, it's not as so we're all a bit scared today. We've never done this before, have we?
No.
How are you feeling about it?
Excited.
Really? Look, the whole idea is each week we will talk about what's going on in the organisation with the clients we work with. We'll also have a particular subject each week. This week, our very first visual podcast. Shortly, we're going to be joined by a guest called Raj Unadkat, who's going to be talking about financial planning, pensions, life insurance policies and bits like that. But what we also like to do is have a quick round robin of what's going on in the world. Jo, I know this week you've been, I say, celebrating, is that the right word, Mental Health Week?
Yes, we are big advocates here at SEEDL for mental health, mental wellness. I think that it's a topic that we really want to support. And a lot of our courses lend themselves to supporting people's mental wellness, whether you're a manager, whether you're an individual contributor. So we ran actually quite a few sessions on mental wellness, but two particular sessions this week where myself and two others who are, I would say, mental health, mental wellness subject matter experts. We talked about stress and how it affects communication in the workplace. Actually went really, really well. And what was interesting was that so many people interacted with us through the chat box, through the webinar that we were delivering. So many people were experiencing very similar things. And it's just such an important topic, more now than it probably ever has been in the past.
I know that in the last 6 years, attitudes towards mental wellness in the workplace have really changed, haven't they?
Yeah, they have. I think that any business that doesn't support employees around mental wellness could find themselves in either sort of hot water to a point, or they might find that engagement is lower than it could be.
Yeah.
Because, you know, whether we find it frustrating, whether we don't relate to it, it's almost irrelevant, because whatever people are experiencing is what they're experiencing, and it's about exploring that and having it on the people agenda, I think.
It's interesting because with organisations, I think pre-pandemic, mental health was seen as a nice to have initiative for the business. I don't mind saying that I know a previous employer I used to work with who was almost like, no, we need to focus on compliance training, which, you know, GDPR was the big thing in the late 2010s. I think that businesses' L&D budgets were being invested in. What I think has changed is, number one, during the pandemic, certainly the UK and Europe with all the lockdowns that were happening, isolation, I think, was a real thing for lots of people, and therefore those that were vulnerable, it brought to the surface those mental health pressures, I suppose. Alongside that, I think that organisations have had no choice but to take mental health more seriously. What do you think?
Yeah, no, I agree. I absolutely agree. And I think that the pandemic does have a lot to answer for. I think that, I was lucky. I was, during the pandemic, when I was working at home, I was already working at home, so there wasn't much change for me. But I had my family around me. My husband was at home, and I've got children, so I wasn't lonely. Whereas a lot of people were really isolated, and suddenly, being in a really big office where they had lots of people to talk to and managers on hand, suddenly they were thrown into this remote world, which brought up a whole load of things. And then we were expected to navigate our way through this to a point. So I think there's repercussions off the back of that now that are happening. And if we want to have really high-performing teams, if we want to have an engaged, motivated workforce, and we want people to be able to deliver the very best version of themselves, then mental health should be taken as seriously as physical health. Because we all talk about being fit, our weight needs to be our weight needs to be right, blood pressure needs to be right.
Thanks for reminding
me. Actually, I probably shouldn't talk about weight. That's going to be triggering. But we talk about having a healthy lifestyle, eating healthily, doing lots of exercise. But we don't always think that mental health is as important as that. And I'm making a sweeping statement. Of course, some people do. Some businesses are fantastic. But I think a lot more could be done.
What's interesting, and I'm not going to say it's sad to see, because at least it's shone a light on it, is that some organisations have taken mental health and mental wellness initiatives more seriously, because they recognise it does impact the bottom line.
Course, absolutely.
Statutory sick pay, sick leave, lack of productivity as a result. I know that Laura Avery Jackson, one of your team, delivers an awful lot of mental wellness webinars and talks about presenteeism, as in the impact of someone coming into the workplace, presenting mental health issues, and the distraction it has on other colleagues. So there is a tangible benefit to employees, isn't it, around doing more for their people around mental wellness?
Yeah, for sure. I mean, at the end of the day, if you are mentally fit and you're mentally healthy, and there are managers are getting the right training to be able to support their staff, then of course performance is going to be better. If you've got people in your organisation that aren't being supported in the right way, then and their performance isn't where it needs to be, and there's no one there to have those conversations, it's going to have an impact for sure. So we do need to really take it quite seriously, and not see it as it's just an excuse. They're making an excuse. It's about having the right conversations in the right way, and managers being trained and understanding the impact it can have if they're not having those conversations, really.
So in other news this week for small businesses, I'm sure there's no secret that politics is creating an awful lot of chaos and uncertainty. Without us getting too political, you'll be aware, Jo, that this week, whilst you've been doing your mental wellness stuff, I've been out and about with our commercial team out in town and city centres in the south of the UK this week, talking to small businesses about what's keeping them awake at night. And I can tell you that the uncertainty is definitely making people consider more before spending. Hospitality in particular, their costs of food is going up, the cost of delivery drivers delivering the goods to their restaurants are going up, and bars, and people's discretionary spend is reducing as a result of the cost of a basket of goods going up, so therefore they've got less money to spend out in their local communities. I'm suspecting that lots of people watching this today, the first episode of our visual podcast, will be wondering where it's going to end. In your experience, how is that, with the Employment Rights Act, with the changing landscape of the economy, what courses are you seeing more engagement with that you think could be attributed towards these changes?
Yeah, that's a really good question. I think, we have somebody that does delivers courses that are specifically designed for smaller businesses, how to run them efficiently, how to save costs, how to be more tax efficient. And he's an accountant, so he knows what he's talking about. Yeah. So we're trying to include content and curriculum that is applicable to a small business and running a small business, because at the end of the day, if you look at the world as it is right now, and you look at the cost of living crisis specifically in the UK, you could, as a small business or somebody wanting to create a business or start a business, they could be put off. Business rates have gone up significantly. Yeah. And if you have got these brilliant ideas or this idea that you want to launch forward, then having the right advice from the get-go can be really helpful in this really challenging times that we're in right now. Some of the noises that came out yesterday, business rates was a huge thing. Yeah. The thresholds, for those that are international small businesses watching this, or others that aren't in a small business, in the UK, rates on effectively a tax on your premises in which you occupy, the thresholds have changed at what point you start paying. A lot of loopholes have been changed or tightened, and as a result of it, again, it's adversely impacting more organisations over another based on the type of business that they are. So warehouses, so there's an awful lot of weight going towards these international companies that sit online and deliver everything to your property. Naming no names, Jeff Bezos might be involved in it possibly. They are paying a much smaller cost per square footage in a warehouse. Meanwhile, the high street, who have to employ people, rather than automated warehouses, they're really finding the cost pressures, aren't they? The other thing, national insurance contributions in the UK, those are starting to bite now. National minimum wage changes that have come on in the last few weeks.
And the final thing that's come out as well is also the impact of statutory sick pay.
Yeah.
Really interesting around the statutory sick pay that it's prorated. So if someone is off, if they work 5 days a week and they're off for 1 day on statutory sick pay, they'll get 1/5 of the weekly allowance. But if they only work 1 day a week, they get the full 1/1 of the weekly allowance, and therefore it's deterring some of these small businesses from employing part-time staff, because their sick pay therefore is actually proportionately more per hour pro rata than a full-time employee that's also on statutory sick pay. So it's really interesting how small businesses are having to really think. And look, I think it was safe to say yesterday there wasn't any small business there that was deliberately looking to limit what people could benefit from if they were genuinely unwell. But I think I can certainly say when I was 16 years old, if I'd been out, or 18 years old, so if I'd been out on a Friday night,
16.
And then going to work on the Saturday morning, if I called in sick, I knew for well I wasn't going to be paid.
Yeah.
But naturally, you can imagine that there are going to be some employers that say, well, actually, this part-time worker, national minimum wage now is quite high. It's going to cost me £11 an hour for them. But if they call in sick, actually it's cost me £12 an hour in sick pay for them. But then I've also got to backfill the shift. Otherwise, this coffee shop's not going to have anyone serving today. So I think, and then all of a sudden, their company becomes unprofitable. And I think what we're now seeing is more performance-based. So one of the things I've noticed in the trends of your curriculum is there is performance management, difficult conversations are all trending upwards, aren't they?
Performance management is a hot topic. Even more so now than ever before because of the Employment Rights Act and managing performance in the right way. And it's really interesting actually because there are so many managers that are put into management positions or leadership positions that are really great and brilliant subject matter experts as an individual contributor, but they're not necessarily given the leadership training when they take that next step. Or it's suggested to them that they become a manager because they're brilliant as individual contributors, but they're not given the right support to be a manager, and they therefore can't support performance in the right way, or they don't understand the performance management process, and they don't understand the disciplinary process, and all of these really important aspects. So we've been really pushing performance management. We really encourage as many of our leaders or our clients to send their leaders on the programme. Or the programmes are also trying to do a bit more face-to-face training, aren't we? We're, bespoke training with organisations that want to give the leaders the right training. So performance management is really important. It's
really interesting, isn't it? Because one of the other bits of statistic we were sharing yesterday, as you'll know, we did a small business survey. And if any of you that are watching this haven't been on it yet, we do quite a lot of opportunities for you to see this data. If not, ask to see it and we'll certainly share it with you. That 74% of managers do not feel prepared for the Employment Rights Act changes. And to your point, if someone has been promoted for their technical skills to now go and manage a team of people,
it's a completely different ballgame.
Exactly, and I think I often joke with new managers, you're an idiot, don't do it. You're crazy. Managing people's, you're managing emotions, you're managing mental health, you're managing their personal lives, you're managing situations that ordinarily are not, when you're in your own control, you get it done. So I think there is a real changing landscape, isn't there?
But you know what? When you do it right and you see a team really come together and collaborate, and you understand how to manage performance, how to motivate, how to help them achieve what they're capable of, it can be the best job in the world.
True. And I also have to say, I think it's quite easy to be a manager when things are going incredibly well for the business. Bonuses are plenty, morale is good, the general vibe, there's a feeling of success in the air. And I think often what we're going through at the moment with the political world, the economy being a bit, I think it's much harder to be a manager because people are looking to place blame on their performance, on anything but themselves. And I think therefore the role of a manager is to make sure you do hold people accountable, but there also is this combination of being challenging but supportive based on the situation they find themselves in.
I agree, and I think when you're running a smaller business, you don't always have the money to pay the bonuses and then give the pay rises. So it's even more important to know how to motivate your staff without having to give those financial rewards, because small businesses don't necessarily have it unless they are super profitable, which it takes a while to get to that stage, as we know. So,
indeed. Right, we're going to have a short break. When you come back from a break, we're going to be joined by a lovely gentleman by the name of Raj, who's going to talk to us all about financial planning, pensions, and I guess covering ourselves if we operate or run a small business. We'll see you soon.
SEEDL has now joined forces with a growing number of HR businesses across the UK, enabling smaller businesses access to SEEDL's hundreds of courses with our groundbreaking technology. SEEDL is the world's first live and on-demand subscription company, offering businesses unlimited access to our content via a business subscription, working directly with organisations from 10 to 10,000 employees. But we're aware smaller organisations often struggle with budgets to enable learning for their business, even though they're exposed to the same risks of not training their staff. SEEDL now has a solution. Our channel partners have an exclusive solution aimed at businesses with just a handful of employees up to a limit of 200 staff. As a partner, you can offer all of your clients each their own platform. No catch, just unlimited content on a range of subjects offered both live and on demand. SEEDL supports our partners with marketing material, your own branded site, and relationship management. SEEDL's Learning isn't a tick box training platform, but a fully loaded learning management system with quality certified curriculum and software. It not only offers hundreds of live and on-demand courses, but enables you or your client to add their HR policy documents, product guides and inductions for new staff, tracking completion and acknowledgements too. From artificial intelligence, sales, customer service, compliance, mental health to project management, health and safety, Office 365, leadership and more. All 1 hour or less. Retain and grow loyalty from existing customers, whilst winning new businesses as a total HR solution provider. Stand out from the crowd by partnering with SEEDL, helping your business and your clients learn, perform, and succeed.
Welcome back to the Small Business Visual Podcast. Me and Joe are still finding our feet with all this. Now let's introduce you to the lovely Raj Unadkat. What's your forward, surely?
Hi guys,
Hey.
How are you?
oh, lovely to see
And
you.
you.
Oh,
Good,
very
eh?
nice to see you.
How you doing, my friend?
Yeah, good to see you.
Take a seat.
Okay, fantastic, thank you.
Mr. Unadkat, we've known you for quite a while, haven't we?
We have, yes.
I think for the benefit of our viewers, it would be nice for them all to know how we met you.
Okay, so we met, I can't remember how many years ago, probably 20, 25 maybe?
Oh my word, I think it is.
25 years ago at Thompson Directories. And we all worked in the same department for a period, which was all good fun.
Well, so I joined after you'd left the training department.
I was in the training department when you were head of.
Yes,
So-
that's
Yeah,
correct.
so
And then
you understand the training space.
I do understand the training space. It's very important, very important.
Indeed, thank you for that. Thank you for that little plug there. So my first question to you then, Raj, is how did you get into financial wealth and wealth planning and all these and life insurance and pensions
Sure.
and things?
So it was always an area I was interested in. I was
Yeah.
always quite passionate about it from a personal perspective. When the opportunity came up to have a bit of a career change, I decided to retrain myself. So about 12 years ago now, I took the exams that I needed to take to qualify as a financial advisor. And the rest is history, really. I've been doing it ever since then. I just enjoy helping people.
Yeah.
There's a lot of lack of understanding and lack of knowledge that we have in this country, really. We don't really teach people enough about money and how to make the most of it. And so I just enjoy helping people and helping them achieve their financial goals, really.
So for the benefit of a small business owner then, if I'm a small business owner and I was to come to you, as I have in the last couple of years, what sort of things can you help me with that perhaps I've forgotten about or haven't considered?
Of course.
Because when I'm working in a big corporate, presumably, it's kind of laid out for me.
It is, yeah. It's all done for you when you work for a company. When you're self-employed or you're running a business, there's a number of things you need to think about. One of the things that business owners get tied up in is just the day-to-day running the business. They're not thinking about the future necessarily, and that's one of the things you do need to do. And you also need to think about what's going to happen when you finish working. So 2 key things come up really. Pensions are the first one. People don't recognise that you can actually make contributions from your company into a pension scheme, and those contributions are free of corporation tax. They're tax deductible.
Okay.
So this is something your accountant might not necessarily inform you about, because accountants don't really deal with pensions. So that's an excellent thing to do, because effectively it's a great way of taking money out of the business, getting tax relief on that money, and allowing for that money to grow tax-free in a tax-free environment. So what you're really doing is you've got one eye on the future as well. A lot of business owners say to me, well, I don't need that, Raj, because I'm going to sell the business and that's going to be my pension. What you worry about there is, A, you don't know what the economic climate's going to be like at some point in the future. I mean, look what we're going through right now. It's quite challenging. Point 2 is you don't know what the business is going to be worth. And point 3, if you don't make that provision now, then you're leaving yourself really exposed in retirement, even though you could have worked really, really hard to build a business. You're never going to know what that business is going to be sold for anyway. No. It's down to market forces. So, so that would be something that I would absolutely say that they should consider. And then the other thing that people often overlook is the fact that you can protect your family through your business. So there are a number of insurances that you can take out. Again, they're a tax deductible expense that you can take out through your company that can help effectively protect your family, but also protect you as the business owner if, for example, a key member of your staff left.
Right.
So.
Okay, interesting. Jo?
Yes, we hear a lot about key person cover. So in plain English, what is it? And why should a small business bother with it? Okay,
so key person cover is something that a lot of people haven't heard of before. So let's say you're running a company, you've got a top salesperson in charge that's probably bringing in 50 or 60% of your revenue. That's someone you'd want to protect, you wouldn't really want to lose them.
No.
Unfortunately, the way the world works now is they might move on to another job. By taking out key person insurance, what you're doing is you're insuring against them leaving. So if they did leave, the business would get a lump sum of money, A, to cover the shortfall in them leaving, but B, to also help you recruit a new person in their place. So it's a really good insurance to have.
I didn't know about that. Never heard of that.
So I know for SEEDL, I know that our key personnel are covered in case they drop dead.
Yeah.
And in the event, that means that the company can provision either to pay out to its estate, or it can, exactly as you alluded to, can fund a backfill of somebody that may not have the vested interest that a shareholder has.
Absolutely, yeah.
So where do you see most of the interest in this key man insurance? Is it the leavers? Is it the life? Is it,
I think it's a combination of both, really. I mean, generally, unless you've got an older key person, they're unlikely to drop dead on you. It's more about them leaving, really. And if they were to leave, then that can create a big hole for a company. So it's a good thing to have in place.
You'll be aware from conversations we've had in more recent times that actually a lot of insurances now are about offsetting risks for banks.
Yes.
Could you talk to our viewers about how that works?
Absolutely. So let's say you have a business loan. If you've got a business loan, then basically the business is liable for that particular to pay off that debt. If you do have any kind of business loans, it's important. I think it's very important that you insure that debt. So effectively, if anything happens to you as the business owner, then that debt is cleared.
Right.
Otherwise, that would come off the value of the business. And you're leaving your family a bit exposed. So it's like when you have any debt, even if you have a personal debt, like you insure your mortgage, for example. It's exactly the same if you have a business.
Okay.
It's really important to just insure that debt, just to maintain the value.
Yeah, that makes sense.
Of the asset.
If I'm honest, until I came and worked in my own business, I assumed that your type of role was for the rich and the famous. The high wealthy.
Yeah.
Financial planning always feels like how do we avoid tax, and I think there's absolutely tax loopholes involved. But how come that myth exists, and what would you say to those people that have those beliefs?
I think it goes back to what I was saying earlier about the fact that we have a real lack of understanding about finances in this country, and a lot of people think that financial advisors are expensive or they can do it themselves. And often you can do these things yourself, but if it's something that you're not putting a lot of time into and exploring, there's a lot of intricacies to financial planning, and there's a lot of things you need to do.
Right.
I think the man on the street should absolutely consider financial planning, and even business owners need to consider financial planning, because basically your finances are affected by how soon you put things into place. So investments grow over time. Yes, they'll go up and down, but the longer you're invested, the more likely they are to grow. We have a phrase in our industry about it's not about timing the market, because people often say, is now a good time to invest? It's not about timing the market, it's time in the market.
Yeah.
The longer you are in the market, generally the better your investments would do. And there's a number of things that you need to consider. So it's not just investments, it's pensions, which I've already spoken about. And then it is things like protection, so family protection, business protection, loan protection. There's other insurance products actually that a business owner could take, which are really, really important. So a lot of business owners don't realise that they can take out life insurance through their business. So again, it's a tax deductible expense, but basically that means that if you die as a business owner, your family will receive quite a large payout, which is really, really important. Another thing you can do as a business owner is take out something called executive income protection, which means if you don't die, but if you're unable to work. So let's say, for example, you're a plumber or a bricklayer or even a dentist. If you injure your hands, you can't work. So what happens to your income? You've still got bills to pay.
Absolutely.
Didn't Rihanna insure her legs once upon a time?
Yeah, I think she did.
Yeah.
But you can absolutely do that, and you can do that through the business. And then what would happen is you would then, until you're back on your feet and able to work again, you would get paid a proportion of income which helps cover your bills, which means that your family doesn't have to go through any hardship. Another type of insurance, which is important if you're working in a partnership or you've got other shareholders, is you can have shareholder protection. So let me paint a picture for you. If there's two people, if you two are shareholders in this business,
which we are,
which you are,
We are.
and one of you
you don't seem as enthusiastic
I'm
about that.
absolutely enthusiastic. Do not worry about that.
and one of you dies suddenly, then it's likely that your shares, the deceased shares, would go to their family. Now, that could be a good thing, but in most cases it's not a good thing. And the reason it's not a good thing is the deceased family receiving those shares, they know nothing about this business. They might not have any interest in it.
Would you like Charlie coming in and trying to call the shots? Nor me neither.
But all of a sudden, a little bit of knowledge can be very dangerous. They might then start taking an interest in the business that they know very little about and try. It can really disrupt the way the business is going. So what shareholder protection provides is it's an insurance policy that just says, in the event that one of the shareholder dies, this pot of money is going to go to their family for their shares.
So it places a valuation on the business.
Absolutely.
At any point in the future.
Yeah.
Of course, if that business goes crazy, they might want to then reconsider that insurance to whether it's got the right level of cover.
Totally.
Really interesting.
What about critical illness cover? Because that's, I would say, really relevant these days, especially with 1 and 2 people dying or getting cancer, and 1 and 3 of us dying.
Yeah.
So how does that play out in the small business world?
So it's difficult to get that through a small business, but where you can get that really, or get that covered, is via the income protection.
Right, okay, I thought that might be the case.
So the income protection, again, if you're ill and unable to work for a period, then this would kick in and pay out. So it's a very important thing to have. And the stat you mentioned is a really accurate one.
Yeah.
Anybody over the age of 40 has a 1 in 2 chance of having a critical illness, which is really, really scary,
so
actually.
Scary. So it almost makes that such an important insurance to have.
Absolutely.
And not that many of us, and that's a sweeping statement, but I think the older you get, the more expensive it becomes.
Yes.
Completely understand that. And that goes back to your point about starting all of these things earlier rather than later.
Totally, yeah. So as well as it works for investments, even for things like life insurances, if you take a critical illness policy out when you're 30 or 35, it's going to be much cheaper than taking it out when you're 50.
Exactly.
Yeah.
And the
And I
the
can say
premiums
from
stay the
private
same.
medical that my tummy doesn't help the insurance premium, Joe. But they're fully tax deductible, so you know. Can I ask, the idea at the moment, obviously, as you say, is around key man insurance with leavers or death of a founder or something like that. What advice would you give to a business owner that might be hitting a rough patch, which actually they're thinking, you know, I need to make hay while the sun shines, but what advice do you give to small business owners for those rough periods? How should they invest when the sun is shining, for those times when, sorry, I'm trying to think of a good metaphor here, when they're running out of aviation fuel? There you go, that's very topical.
Yeah, that's an interesting one because it depends. Every individual business is different.
Right.
But I think you've got to, and I would look at everybody individually because it depends on what their goals are, what kind of turnover the business has, how much hay they are making.
Yeah.
But it's important to try and cover off some key bases. So making sure you're making provision for the future, if you can, making sure that you're protecting the people that you've got in the business that are bringing all that hay in.
Yes.
And thirdly, whilst you do have some money, making sure, most importantly, you know, why do people work hard? Why do people start their own businesses? It's because they want to provide a better life for themselves and their family. So it's making sure that you protect yourself. You know, people say, if you're the engine of the business, what happens if that engine stops? You know, you've got to make sure you protect it and look after it.
And often investment firms will expect there to be that level of cover.
Yes.
Because it's underwriting their investment in the organisation in the first place.
Yeah.
Absolutely, yeah. Otherwise, it's a huge risk. It's absolutely a huge risk for anybody investing in a business.
As a employer of people, how do you support businesses that employ people? You know, I'm guessing you go into businesses with pensions advice. Do you advise businesses on those sorts of things? And
yeah, absolutely. So a business can do a number of things when it comes to providing advice or guidance for their employees. So we go in and talk to people about pensions, both private and business-related pensions. A lot of people that you have employed might have worked in 2 or 3 other places. We don't have jobs for life anymore, so they might have 3 or 4 different pensions in different places. It's really important that they consolidate those.
Right.
And the reason that's important is because you might have, when you have an occupational pension scheme, it basically covers the lowest paid person in the company up to the highest paid person in the company. Their finances are very different. As a result of that, they're very vanilla in their investment approach. So they might not take as much risk as you feel comfortable with, or they'll be taking too much or too little. And so the benefit of having a personal pension plan and consolidating all of those things is it's basically bespoke to you. And then you can add funds into it if you wish to do so. The other thing that we often find when we go and speak to individuals, again, we talked about protecting your family, but you know, do you have life insurance in place? Do you have critical illness cover in place? You know, what would happen if you stopped working tomorrow? How do you pay your mortgage? How do you pay your bills? So it's these kind of conversations which are sometimes difficult and uncomfortable, but they're important to have because everyday life takes over and you always push these things back for another day and I'll get that sorted, but it's very important.
I have a question actually, which might be a little bit controversial, but I'll ask it anyway. It's not on my list either. But there's a lot of people that have probably done a lot of the things that you've said, but then insurance hasn't necessarily paid out, or the journey to try and get that payout has been considerably challenging. What advice do you have around that, if any?
What a great question.
Yeah, it's a very good question.
Get rid of that.
I know I surprise you at times.
There's a big misconception about insurance that, you know, no point in taking it out because they don't pay out.
Yeah.
That might have been the case many moons ago. It's not the case anymore. Generally, most decent insurance companies have between a 96 and 98% payment record.
Okay.
So there's very few claims that they turn down. They're only likely to turn down claims if something comes to light that you didn't declare when you first applied.
Makes sense.
And that's why it's really important to be super honest when you are going through the application process, because what you don't want to do is give them a reason not to pay you because you didn't tell them about the fact that you had high blood pressure or you had some back operation many moons ago, or something like that. So you've just got to be open and honest with them, and if you are, they've got a great record of paying out.
Yeah.
Again, that's the other advantage of having a financial advisor, because if any of my clients need to make a claim, I go into bat for them as well, because obviously I'm giving a lot of business to these insurers, and I want to make sure that if I've advised somebody,
you can hold the insurers
absolutely,
to the fire.
Absolutely, yeah.
There is a lot of talk recently, Labour government legislating pension contributions being taxable, all these sorts of things. What advice do you give to small business owners to make sure that they are, getting the best value for money, I guess, in their investment in pensions and things?
So there is a lot of legislative change coming up. Just for the viewers, so the main change that's happening is that from April 2027, any pensions that you hold will form part of your estate.
Right.
So before they didn't form part of your estate, and everyone's got
so the £300,000 threshold.
Yeah, so there's a threshold of £325,000, which actually
Inheritance tax.
exactly, which is called the nil rate band. That hasn't moved since 2009.
Right, but if
it had gone up with inflation, it would be £500,000 now. Wow. And there's something else called the residential nil rate band, which means that if you have a house that you're going to leave to your beneficiaries, then between a husband and wife, the 325 plus the 175 is £500,000. So if you two are married, that would mean £1 million you could
never going to
pass.
happen, bro. It's never going to happen.
You could pass £1 million to your children free of tax. Every pound over that is taxed at 40%.
Oh, that's crazy.
So what's now happening from next April is, if you've got really big pension pots, they're going to be coming into that. So let's say you had exactly £1 million. So your house and all your savings equate to £1 million. There's no tax to pay. All of a sudden, Ant's got a pension worth £500,000.
Advised by Raj, of course.
And you've got a pension worth £500,000. So all of a sudden, you're £1 million over the threshold. The inheritance tax on that would be £400,000.
Yeah. Right. Is there anything you can do about
that? There are things you can do, but again, and this is where a financial advisor adds value. So there are a number of different things you can do. Obviously, with every pension, you're allowed to take 25% out tax-free, so that would reduce it straight away.
Yeah.
There's gifting allowances that you can utilise.
Yeah.
And I often tell people that are kind of retiring, just go and spend some of it, because you're generally going to give your children more of a leg up than you ever had.
Absolutely.
So it's important that you go and enjoy yourself and do the travelling and things.
Worked hard all your life.
Absolutely.
Go and make the most of it while you can.
It's an interesting conversation to take to people. Go and spend it, because they've spent so long scrimping and saving and building this. It's an alien concept, but it's a nice thing to do.
Yeah.
Any founders or business owners watching this right now that are considering exiting or selling their business in the next 5 years, what should they be doing now with people like you to be ready for that?
That's a great question.
Thanks, Raj.
Thank you. So the reason
that's a great question.
So the reason that's a really good question is basically when you sell your business, there's a lot of tax to pay potentially, and obviously you're adding to your inheritance tax. So there are a number of things that a business owner can do, but it's important that you put things in place prior to the sale, if that makes sense.
Okay.
So there are some allowances, or there's some products that you can put that money into that would take any proceeds of a sale outside of your estate within 2 years.
Okay.
So it's called business relief.
Okay.
And again,
is this disposal asset relief, or is that a different thing?
That's something different.
Right, okay.
That's something different. So this is called business relief. So if you have a qualifying business, you could put the sale proceeds into this particular product, and after a period of 2 years, the money's outside of your estate, as long as you're holding it at the time of your passing.
Right, I see. Okay.
But it doesn't mean you can't access it. So it's a clever thing to do.
Yeah. A small business owner watching this now, apart from getting in touch with you for a brilliant, obviously, financial review, no doubt, what one piece of advice would you give them that they should take away from our time with you today?
Take action.
Ooh.
Take action. And the reason I say that is because I totally understand, because I speak to a lot of business owners, you get bogged down in the day-to-day running of the business, and it's very easy to put these things aside. It's really important that you make time to discuss the finances with somebody that knows what they're talking about, and then they can take that burden off you. It's one less thing to think about once it's sorted. Otherwise, it's always going to be in the back of your mind.
Okay. Joe?
Yes, I'd like to ask, what are some of the simplest ways for business owners to take money out of the company without getting clobbered by tax? Which I'm sure many business owners will know the answer to.
So obviously,
I don't. I've not found a way yet.
So obviously, what most business owners do is they take a salary up to the personal allowance, which is about £12,500, and then they take out dividends after that.
Right.
Another way you can take money out of the business is to put it into a pension. So that way you're maintaining the money. The money's still going to be yours. You just won't be able to access it until you hit a certain age. So that's a good thing to do.
Has the thresholds changed though because of the current legislation, or is there's no problem with that?
No.
Okay.
There's no issue with that. At the moment, there was talk about reducing the amount you get tax relief on, but they haven't touched that as yet.
Okay.
Another thing that businesses can do, sorry, I can't get my words out, is if you're a business that's cash rich and is holding a lot of money in business bank accounts, that can get quite frustrating because business banking pays very little interest. So another thing a business can do is a corporate investment, where the business makes an investment into the investment market, and effectively you're getting a much better return on that money.
Right.
The money doesn't come back to you as the business owner, but it will effectively come back to the business.
Yeah.
So you can end up making, 4, 5, 6, 7, 8%, depending on what level of risk you take on that money, which is much better than the 1.5% you're earning in the bank.
Speaking of risk, some people go high risk, and I imagine lots of business owners by default are more risk comfortable than someone
risk
that's versus those risk averse people in big corporates. Where is good investments for pensions at the moment? I take it it's quite difficult for you to advise, presumably, but
so that's a difficult question to answer, only because it totally depends on the individual. So what we do is the process we follow is we get you to fill out a attitude to risk questionnaire, 18 questions that basically give us an understanding of what level of risk you feel comfortable with. I would then find suitable funds that match that level of risk. The most important thing from my perspective is I don't want you up at night worrying about what's Raj doing with my pension? Is it gone up? Is it gone down? What's happening?
Do you sit up at night playing with people's pensions then? Is that how it works?
No, but it's just important that you feel comfortable with the level of risk you take. And then basically every year we have an annual review where we can reassess your level of risk because your circumstances change. You might not be in the same place next year as you are this year.
Yeah. A question which I'm supposing some people may not understand is that you sound expensive to me. Is that a myth, or actually is it not?
It's absolutely a myth. Many of the fees that we charge, so for example, for insurance policies, we get paid by the insurer.
Right.
I'm not allowed to recommend anything to any client that is not suitable for their needs. That gets checked both internally, and I'm covered by the FCA.
Yeah, it's regulated.
It's totally regulated. You get a written report with my recommendation. So if at any time there is any comeback, you can put that in front of any regulator and say, look, Raj told me, it's in black and white, this is what he said, and I followed his advice.
Oh, okay.
So there's no need to be worried and concerned. So the fees for insurance come from the insurance company. The fees from the pension can come from the pension companies, especially if you're consolidating 2 or 3 pensions. When we consolidate those into one, they can come out of the pension pot themselves.
Right.
So you very rarely have to find
Okay, so those people that are thinking that they'd love to have time with you but don't necessarily have £500 sat in the bank to pay you for your time, actually you would give them a review and then say, actually there's 2 ways we can do this.
Well, what's important is it's important that they feel comfortable working with me and vice versa. If I speak to somebody and think, you know what, I really can't help you, then I'll tell them that, and there's no charge for that. But it's important to start the conversation. That's the most important thing.
Yeah. Joe?
We've had a question in actually from the viewer, Raj, I'd like to share with you. If you could change one thing about how an SME owner manages their money, what would it be?
Oh, that is a good question. So what I would say is it's very important that you make your money work hard. As a nation, people are sat on lots and lots and lots of money that they just keep in the bank as a safety net. And that safety net pays you a pittance. It's really paying you very, very small amounts of money. And what's really interesting is when interest rates go up, any interest that you're paying on a mortgage or a loan goes up immediately, and there seems to be a huge delay in them increasing what they pay you on your savings. And so what I say to people is it's important that you make your money work as hard as possible. And so it goes back to what I said earlier, take action. Don't let the money be sat there. Be doing things with it. Make sure you're doing things with it, either for the benefit of your business or paying into your pension or making sure you're getting the protection you and your family deserve, or investing it through the company. But do something. Don't just sit on it.
I've got a question actually. I think there's lots of complexities, aren't there, around wealth?
Yes.
It's a regulated area that, unless you're in that regulated space, you don't necessarily know loads about it, certainly from my experience. But we don't really teach it. We don't talk about it. You know, in schools, it's not a subject that's ever considered, or, you know, children or young adults will come out of school or education with very, very little knowledge, but they are at the age where it's vitally important for them to have that knowledge. So I'm interested to know what your thoughts are around that, and how could we better educate our young adults so that they do invest earlier and they don't necessarily understand about financial advisors in their 30s, 40s and 50s when it's almost a bit late. Yeah,
that's a really good point, Jo. I think it absolutely should be taught in schools, and there's some real basic things that could be taught. So you should be taught in schools, what is a mortgage? How does a mortgage work? How does interest work? What are the benefits of paying that off earlier? How much interest do you end up paying on a mortgage, for example? Credit cards. What are the upsides of credit cards and what are the downsides of credit cards? How easy is it to get into debt on credit cards? Credit scores. How do you build your credit score? Things like this. All of these things are really essential skills that our young people are not being taught, and you're really reliant then on the parents to try and teach some of that stuff.
Exactly.
Which is so important, because if you don't know these things, you can get yourself into a real mess very quickly, and then ruin your future life, because if you get into debt, it's very hard to get a mortgage, for example.
And there's probably loads and loads of budding entrepreneurs within those the school that this sort of information is vital, isn't it?
Yeah, and it's just very basic and simple information, and you can break it down into a very simple. It wouldn't take too long for people to pick it up, so it's something that definitely needs to be addressed.
Yeah.
I know you are a parent, so what financial advice have you given your girls? Is that right?
Yes, that's right. Yeah, all the things I've just said, actually, funny enough. So we've talked about. Sunday
roast must be fascinating at your house.
So how do you grow? So how do you build your credit score? So the best way to build your credit score is, anybody that lends you money wants to see that you have the ability to pay something back regularly. So, for example, mobile phone bills is a good one. All kids have got mobile phone bills. Once they are old enough, put that bill in their name and have the money coming out from their account on a monthly, regular basis. Once they are working, get them a credit card. But what I've told my girls is only buy your fuel on that credit card, and then make sure you pay it off every single month, so you don't get into any debt. You're only putting your petrol on that card. And interestingly now, I think it's got through because one of my daughters comes and says, "Dad, see my credit score this month, it's gone up by X, Y, Z." But it's interesting that they're now engaged
agreed.
in that.
That's great tips.
You know, and they've asked about things like, so tell me how do mortgages work and why do I need a will and stuff like that. All of these things are really, really important, but the conversation has to start somewhere. And if it's not starting in the schools, it has to start at home.
And then we've got to expect the parents to be educated in that space.
Absolutely.
As well. And they're not always.
Absolutely. And actually, funny enough, in my job, I have had situations where people have said, "Can you come in and speak to our kids about this?" Because they don't listen to us. And these are people who've got children in mid-20s, early 30s, because, again, it goes back to time. You know, if you've got spare money, start putting into a pension or start investing, or you utilise your ISA allowance. That's really, really important. What is an ISA? People don't know what that is, you know. So
I'm conscious of time, Raj. How do people, apart from the fact we will obviously share ways people can get in touch with you, how can someone find out about working with you or meeting with you if they want to know more about their own financial planning?
So I'd happily give anybody a financial review and just have a chat, because I'm passionate about this topic
We can
that's
tell.
come across.
You used to be passionate about black and white adverts, Raj,
I
back
know
in the day.
how things have changed. How things have changed. Yeah, so just feel free to give me a call. I'm sure you'll share my number, or drop me an email, which I'm sure you'll share at the end of this. But
And what areas do you cover?
I cover everything. So I do pensions, investments, protection planning, inheritance tax planning, trust work. Estate planning, basically, everything.
And geographically?
Geographically, well, these days, because we've got Teams and Zoom, we can do national. But if someone wants a face-to-face meeting, then I live here in Fleet, so I'm happy to travel an hour outside of Fleet.
Cool, okay. Thank you very much for your
Very
time,
welcome.
Mr. Unadkat. Excellent to see you. Thanks for being our first ever guest. How's it been?
I've really enjoyed it. Thank you
we
for the
told you
opportunity.
not to be scared. Anyway, thanks for joining us.
Thank you.
That's great. Thanks, Raj.
Welcome back to the Small Business Visual Podcast, and thank you very much to Raj joining us. We will make sure we post some of his links and bits and pieces for those of you that are interested in a free consultation with them. I reckon we're going to, some of our staff upstairs will definitely be interested.
I think that was so interesting and so useful.
Yeah, it is. So how have you found this first episode then? Because I know we're kind of finding our feet with all this, aren't we?
Yeah, the thought of doing it is always far more daunting than actually doing it.
Yeah. Well, sitting next to me is quite daunting, I get that. Yeah,
absolutely. Yeah, I've loved it. I think it's been really informative. Listening to Raj, really informative. Loved what he said. think it's such an important topic. We don't talk about financial or understanding the financials early enough in life, generally. So, and it's just good to have a good old chat about these important things.
It is. So look, this is where our viewers come in to this. We would love you to make suggestions of topics you'd like, people you'd like us to have interviewed. We've got guests coming up in the coming weeks around HR and people. We're going to be talking about culture. We're going to be talking about bookkeeping for small business and financial planning in terms of those administrative pieces. But if there's a particular topic you'd like us to talk about, we have a bank of guests we can rely upon that are always willing to come in and talk to us. You can suggest that by getting in touch at hello@seedl.com. That's hello@seedl.com. And we'd love to get your subjects included in the weekly video podcasts. On behalf of SEEDL and the Visual Video Podcast for Small Business, I've been Anthony.
I've been Joe.
And thanks for watching.